What up? What up? What up? It's your boy coming at you. It's Monday. It's a little late today, but that's all right. We're still getting the message nonetheless, man. Uh, man, it's getting interesting in these NBA playoffs. The Suns dropped one, jumped out on them, couldn't continue it. I know I be making an analogy to the market, but sometimes your stock jump out like the Suns did, and then sometimes the bottom fall out of it just like the Suns did. So, you got to keep your eye on it, see what's going on. These markets are a little crazy today. It's a big sell-off. I don't know what they're scared of. If we learn anything from 2021 is market is artificially inflated anyway, and the stocks are gonna keep it rolling. It's gonna keep it rolling. So if you're investing in good stocks, you ain't never gonna see a real big downturn. So I don't want to say never, but that downturn gonna turn around because you're investing in them good stocks and you're doing like we talk about. We buy it at good prices. As long as you're doing them things, we're gonna be all right in this game. Right? You got to find them good companies, right? You got to invest in them for a long period of time. And I say a long period of time. A long period of time for you might be a year, might be 4 years, it might be 20 years. But give it time to sit in the market, see what it do for you. We're gonna talk about that a little bit today. Like I say though, the market is down a little bit for whatever reason. But if you've been sticking to our principles and investing at good prices and finding these value stocks that are good quality, top of the line stocks, then you're probably seeing a lot of benefit in the market and not really seeing a whole lot of that fluctuation. Not panicked at all, which you should never do because we're not using money that we need tomorrow to buy school books or a meal or nothing like that. We investing in ourselves first and still have money for that type of stuff. That's the way we're getting after it. But we don't panic when the market do nothing. All we do is make money. And say we want to make money when it go up. We want to make money when it go down. And we're not going to panic because we know the money always come back around. So, that's what we own today. That's what we own today. We're talking to you like a lot of times we sit around a job waiting for somebody to give us a raise, 1%. I think I've been getting 1.5% for forever now, or not forever. It's been time we've frozen or whatever. So other times I was waiting on a raise, didn't even get one. But it's like, okay, so what you gonna do? You gonna sit around waiting for somebody else to determine your worth, or you gonna get out there and you gonna make it happen? And you say, well, how can we get these raises, Daryl? Totally depends on what you want to invest in yourself, because that's really what this market is about. It gives you a chance to give yourself your own raise. You figure over the last 100 years. The average rate of return of the S&P 500 is 7%. 7%. Just give you some numbers. 7% of 10,000, right? What's that? $700. 7% of 100,000 is what? $7,000. That adds up over time, and that's every year, And some years the rate of return is better than that. So you figure, like I say, $10,000 at 7% bring you $700. $10,000 at 13% bring you $1,300. $10,000 at 30% bring you $3,000, and then at 50%, $10,000 gonna bring you $5,000. And obviously at $100,000, which we saw some last year, at $10,000, 100%, that's gonna bring you $10,000. So and when we talk about the rate of return, all of those things are the rate of return and the annual rate of return. We add those up, So say, I don't know, what are we talking about? So say you take all those ones we just added, those examples we gave, you add them up. So let's see, your rate of return on that investment. So, and you take the 7%, you take the 13%, you take the 30% and the 50%, you add it up. Then you divide it by 4, just like you would the grade point average, anything like that. That's a 25% of rate of return. So a 25% of rate of return on $10,000 is $2,500. And you figure if you're doing that, over a 4-year period, that's $10,000 over 4 years. In 4 years you can expect to double your investment. That's not bad. And so when you're doing that, that means you get to determine your wealth, your growth. But the price points improve the rate of your return. Understand? So while that's the average rate of return, if you buy any good companies at discounts and at low price points like we talk about all the time, then you're going to see a bigger rate of return. 7% is the average rate of return. That's better than any bank account you're going to get, any bond. You know, the only thing even close to it probably is your home, you know, and your home, a lot of times you got to live in. But like I say, I think I said it before, you're not attached to that home, you know. If the market's in your favor and you sell it and you can find you another place to live that's comparable and affordable and something that you want, why not use it to make a little bread? You know what I'm saying? You can do that, but you got to be understanding that, you know, when you move on, sometimes you may have to wait to find what you want again. But don't be afraid to use your assets to turn it into more assets. There's nothing wrong with that. And then, last but not least, I say it all the time in the market improves the rate of return. So, while first year you might see a 7-point return, prices are going to continue to rise. They're going to continue to rise, and then, like I say, next year, I mean, there were stocks that saw 30, 50, 100. Hell, some stocks saw 200, 2,000% last year. Now, I don't know what the price range on all of them is and wouldn't break them down because I only invest in the ones that I invest in. There was a lot of stocks out there with money to get. So take advantage. Get out there and look at these stocks. You say, well, Daryl, why are you talking about 10 grand? Well, I use 10 grand because it's a reasonable number to invest. How big your raise is depending on you and how you live and how you invest. But $10,000 is a reasonable amount of money to invest in yourself, whether it be over a year's period or whether it be over a 4-year period. I guarantee you, if you break down all the things you trick off, it's $10,000 in there somewhere. So let's stop tricking off all of it. Let's split up some of that trick off, invest in ourselves a little bit. So then they say, you know what they say, it ain't tricking if you can afford it. So if you invest in yourself, you might be able to afford it one day. So it won't be trick off money. It just be money that you got to do whatever it is. So hey, keep doing what you're doing. Remember that annual rate of return. It's gonna take some patience. I mean, especially when the market down like this. When the market go down like this, I'm always looking for opportunities to buy. But that's part of the problem is when you buy low, it don't necessarily get down to where you want it. So, I mean, you got to be patient. But it totally depends on where you're at with it. If you're just about accumulating shares and building up that way, there's nothing wrong with that either because that's going to bring wealth too. It's just not going to bring the biggest rate of return, but it's still going to bring the rate of return. And the math is still going to be the same. 7% average return over the last 100 years. 7% is a good amount, And then, like I say, if you can do 10 in 1 year, and I don't know how old nobody is, I'm lying. I know how old some of us is. Because y'all all friends of mine, but if you can do 10,000, a year for a 10-year period, that's 100,000. 100,000 could flip into 2 over that 4-year period, and if the markets take off running, it can be a lot more than that. So, I'm not promising you nothing, but I'm just telling you what the history says. So, hey, keep investing in yourself. Cheer on these funky sons. I don't know what's going on with them. Cheer them on. We're gonna get there. We're gonna invest in ourselves. We're gonna invest in our health. We're gonna invest in our wealth. We're gonna keep doing what we do. Hey, look for the opportunity. It's probably one out there today. What did I say? Simon Property Group. Way down today. I have a chance to get it almost at the price that I got in initially. So, it's stuff out there, Apple's coming down. It's probably not going back to 120, but it's coming down and it's giving you opportunity. So, find those companies that, you're going to invest in. They ain't going nowhere. And they're going to make you money over the long haul. I think Amazon's down today. I think Google's down today. Chipotle's down today. And these are all companies that through a pandemic, which is what we have right now, the pandemic sell-off was through a pandemic, and I'm talking about the world shut down, pandemic. All these companies flourished, and some of them made more money than you wouldn't believe. So, and when they make money, that means you make money. So don't be afraid to invest in these companies at good prices. Make sure you're out there getting it in. Hey, I love y'all. As always, stay up, invest in yourself, invest in your health, and I'll talk to you real good, real soon. All right, now, peace and hair grease.